my name is Aizat Islam binti Aziz and I'm representing Group 12 from Class L1. Today, we'll be presenting our financial management project entitled Building Resolution, the SP Setia Strategy Private Executive Financial Summary and 2026 Outlook. Before we begin, I would like to introduce the member of our group who contribute to this project. Through teamwork and collaboration, we conduct a comprehensive financial analysis of SP Setia Berhad to evaluate this financial performance, financial position, and future outlook. The presenting examiner the company financial journey and highlight the key strategy that contribute to its recovery and stabilization over the year. This slide provides an overview of SP Setia strategy transformation from 2021 to 2025. A large revenue decline from RM 5.29 billion to RM 4.21 billion due to weaker market condition. The company managed to improve its overall financial performance. SP Setia achieved a net profit margin of 14.31%, reflecting better cost management and improved profitability. In addition, the debt to asset ratio decreased to 0.41, indicate a stronger balance sheet and lower dependence on borrow fund. Overall, the result show that the company successfully strengthened its financial position despite facing revenue challenges.
Hi, my name is Farhana Benshar Amina. My number is H248970. So let's talk about the 5-year revenue roller coaster. So the company's 5 years revenue from 2021 to 2023. So the revenue fluctuated like a roller coaster due to a market condition. So SP Setia start in 2021 with RM 3.7 billion. Its highest point was in 2024. It's reaching RM 5.9 billion. So this was because strong property sales. However, in 2025, the revenue dropped to RM 5.21 billion due to a weaker market and global issue. In short, even though its revenue went up and down, the company is doing well because internally is structured.
For this slide, we can see the profit margin of SP Setia from 2021 until 2025. The profit margin decreased from 9.23% in 2021 to 8.17% in 2023. This means the company earned less profit from its sales during that period. However, the profit margin increased strongly in 2024 and reached 40.31% in 2025, which is the highest percentage in 5 years. Even though the company revenue decreased in 2025, SP Setia still managed to earn high profit. This happened because the company controlled its costs and spent more effective. In conclusion, SP Setia showed good cost management and improved its profit in 2025. That's all.
So the next is a tale of two eras. So it's compared between a period for the company, the recovery phase and stabilization phase. First, during the recovery phase from 2021 to 2023, SP Setia faced many challenges. So its profit margin arose between 23% and 30%. So the company also had a high debt which peaked at 0.94 and struggled to pay its debit cost. Luckily, the company moved into the stabilization phase from 2024 to 2025. In this phase, the margins increased successfully to 39.43%. At the same time, the debts dropped sharply to save a level of 0.98, and the company's financial had recovered. So this is show their new strategies working.
Assalamualaikum. My name is Ni Ali Sofia binti Ni Rofi. My number matric is H24A2997. This slide presents SP Setia's liquidity performance in 2025. First, the current ratio is 1.58 times, which means the company has sufficient current asset to cover its short-term liabilities. This indicates a healthy liquidity position. Next, the cash ratio is 0.46, showing that the company has adequate cash reserve to meet its immediate financial obligations. The quick ratio is negative 1.25. Although this appears negative, is common in the property development industry because a significant amount of capital is tied up in land and unsold properties, which are recorded as inventories. Therefore, this result is considered an industry characteristic rather than a financial weakness. Overall, SP Setia demonstrates a stable liquidity position and its net working capital has improved over the years, indicating positive progress in its financial structure. Okay.
Hi, my name is Nur Azira Bashira binti Nurdin. My metric number is H24A3500. Now, I would like to present Pillar 2, the profitability engine, which highlights the company's profitability performance from 2021 to 2025. As shown in the graph, the gross profit margin increased from 26.76% in 2021 to 39.43% in 2025. This indicates that the company became more effective in controlling costs and generating profit from its sales over the years. Next, the return on asset improved from 1.73% to 3.57%, showing that the company utilized its asset more efficiently to generate earnings. Next, the return on equity increased from 2.22% in 2021 to 3.75% in 2025, reflecting better returns for shareholders and improved efficiency in using shareholders' investment. Overall, the company demonstrated a strong improvement in profitability, especially from 2023 onwards, by generating more profit from every ringgit of revenue through better cost control and more efficient use of its resources. That's all from me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Abin Fadila binti Azahar, with my metric number is H24A3761. So, this picture shows that SP Setia has successfully reduced its debt and improved its financial position between 2022 and 2025. In 2022, the company's debt-to-asset ratio was 1.49, which means its total debt was higher than its asset. By 2025, the debt-to-asset ratios decreased to 0.41. That means the company assets are much higher than its debt, making its financial position a much more stronger and stable. So, the supporting metric also shows a positive impact. Improvement. Debt-to-equity ratios decreased significantly from 9.3, which is in 2022, to 0.68 in 2025, meaning the company released less on debt financing. Interest coverage ratios improved to 3.82 in 2025, showing that the company can comfortably pay the interest expenses using its operating profits. Overall, SP Setia reduced its debt burden, strengthened its balance sheets, and become financially stable.
Assalamualaikum. My name is Ni Anastasia binti Nirofi.
and my metric number is H24A2998. Next, I will explain Pillar 4, which is operational efficiency of SP Setia Berhad from 2021 to 2025. For asset turnover ratio, it shows how efficiently the company used its assets to generate sales. It increased from 0.12 times in 2021 to 0.19 times in 2024 before slightly dropped to 0.16 times in 2025. Overall, this shows the company has improved in using its asset to generate revenue. Even though there is small decline in 2025, the overall trend is still positive compared to 2021. For inventory turnover ratio, it shows how fast the company sells its inventory. It increased from 0.17 times in 2021 to 0.22 times in 2024, then went down to 0.16 times in 2025. This means inventory management improved steadily until 2024, but slowed slightly in 2025, possibly due to market conditions. Both ratios show that SP Setia has generally improved its operational efficiency, especially in asset utilization and inventory management, which support the company's overall performance. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Berhad and I'm a student management This slide highlights SP Setia's strong financial performance in 2025. The company improved its solvency by reducing debt, maintained stable liquidity, achieved a 5-year peak net profit margin of 14.31% and enhanced efficiency through better asset utilization. Despite a 20% decline in revenue, the company focused on consolidation, strengthening its financial position, and preparing for sustainable future growth.
Now, I will explain our forecast for SP Setia's performance in 2026. To estimate the company's future revenue, we use the percent of sales method. We first calculated the average revenue growth rate from 2022 until 2025, which resulted in a growth rate of 4.32%. Using the future value formula, we multiplied the 2025 revenue baseline of Rm 4.218 billion by 1.0432. Based on this calculation, the forecasted revenue for 2026 is approximately Rm 4.4 billion. This projection is considered conservative because it takes into account both positive factors such as township expansion and external challenges, including inflation and global economic uncertainties. Therefore, we believe this forecast provides a realistic expectation of the company's future performance.
Assalamualaikum, my name is Surani binti Sulaiman and my metric number is #24A922. Today I will be presenting two sections of our analysis, which are the 2026 pro forma financial waterfall and the strategic outlook, risk versus opportunity. The financial projection of 2026. This slide presents the company's projected financial performance for the years 2026 using a financial waterfall chart. The company is forecasted to generate revenue of approximately 4,400,054,000 ringgit, together with another income of 312,825,000 ringgit. The first and largest deduction is the cost of sale, which is estimated at 2,665,111,012,000 ringgit, representing approximately 60.57% of total sales. This mainly includes development and construction related costs. Next, administrative and general expenses are projected to be 543,846,000 ringgit, accounting for around 12.36% of sales. In addition, the company is expected to incur finance cost of 357,724,000 ringgit, followed by taxation expenses of 240,446,000 ringgit. After deducting all operating costs, thus finance costs and tax, the company is projected to fetch a net profit of 761,450,000 ringgit in 2026. The projection suggests that the company is capable to maintain strong profitability through efficient cost management while continuing to generate stable revenue growth. The company's strategy outlook, risk versus opportunity. The slide highlight the key risks and opportunity that may affect the company's future performance. For the risk, the company may face economic uncertainty, rising inflation, higher material costs, and increased interest rate, which could raise property demand and affect profitability. In addition, oversupply in certain residential segment may create stronger competition in the market. On the other hand, there are several opportunities of growth. The recovery of tourism, increasing foreign investment, and ongoing infrastructure development can support future property demand. The company can also strengthen its position through its life, work, and play township concept and by expanding into industrial and commercial property development. Overall, despite the challenges, the company has a good growth potential if they continue to leverage this opportunity effectively. Okay, thank you.
In conclusion, our analysis shows that SP Setia is in a strong position for sustainable growth. First, the company has improved its profitability by focusing on higher margin projects and more disciplined operation. Second, it has strengthened its financial foundation by reducing leverage and improving its balance sheet position. Third, our forecast indicates that the company has the potential to generate strong profits in 2026 even under a conservative growth assumption. Overall, SP Setia has successfully transformed from a period of aggressive expansion into a more stable and efficient business model. With a solid financial foundation and positive future prospects, the company is well prepared for long-term growth. That's all from us. Thank you.